Hi everyone, in this video I'm going to answer which one is the better momentum stock to buy right now, C3.ai or Carvana. Each of these stocks is experiencing significant momentum so far in 2023. C3.ai stock is up 100%, while Carvana stock is up 152% in a little over 1 month in 2023. So incredible momentum for each of these stocks, making them one of the top momentum stocks right now. And so I wanted to answer which one would be the better buy for those looking to ride this momentum or chase the momentum in these two stocks. First, I wanted to look at their revenue growth, and Carvana's revenue growth has been on a tailspin downward, down negative 2.7% in its most recent quarter. It was a prime beneficiary during the pandemic. People were buying cars from it as they look to, as supply chain shortages hurt new car sales. People went to Carvana looking to buy used cars, and revenue soared. It's now turning into a headwind. People don't want those anymore. Meanwhile, C3.ai's revenue is also slowing, but it was still up 7% in its most recent quarter. C3.ai is catching the tailwind from the popularity of ChatGPT and generative AI technology. C3.ai is rumored to be launching its own generative AI product in March. So that's what's creating the momentum in C3.ai stock, while Carvana stock is gaining momentum from the decreasing expectancy of it going into bankruptcy and just a lot of hype and momentum. No real catalysts for Carvana's increase in stock price. Looking at cash flow from operations, C3.ai experiencing a downward trend in cash flow from operations, negative 52 million in its most recent quarter, while Carvana had been experiencing significant downward. It got a boost in terms of cash flow from operations, but still negative 98 million in its most recent quarter, lost nearly 1.2 billion in the quarter in January 2022. The next metric I wanted to look at is how much cash these companies have on hand, because they're losing a lot of cash flow from operations. So I want to see how much time they've got with the current cash on hand. C3.ai has 277 million in cash on hand. It lost 52 million in its most recent quarter. So it's got about 6 quarters of cash in its balance sheet. Meanwhile, Carvana's got 316 million in cash, and it lost 98 million in cash from operations, so only about 3/4 of cash on hand, and its sales are falling, so that could be even worse for Carvana. So I would say C3.ai is in a better liquidity position here. Next, I wanted to look at operating margin. C3.ai's operating margin is collapsing, negative 92.33% and negative 7.95% for Carvana. And looking across these metrics, it raises the question why so many investors are interested in these two stocks. Revenue growth is collapsing, operating margins are collapsing, cash flow from operations are collapsing. They're really short on cash overall. I guess maybe because their stock price had been so beaten down in 2022 that they're catching a rebound, catching a bid here early in 2023. Although they are incredibly risky, so I would caution those of you who are looking at these two momentum stocks trying to decide which one of them is the better buy. Finally, let's look at valuation, forward price to sales ratio, because they're both losing money. They're both negative cash flow, so I chose to use the price to sales. And looking at this metric, C3.ai trading at a 9.475 forward price to sales, while Carvana is trading at a 0.093 price to sales ratio. This is down from a 2.4 price to sales ratio, so it was trading at more than 25 times the valuation it's trading for right now during the peak of its popularity during the pandemic, and that's come crashing down here to 0.093. So to decide which one of these two is the better stock to buy, now I will caution that these are risky momentum stocks, very risky momentum stocks. So be cautious in choosing between these two. But if I had to pick one of these two, I would say to go with C3.ai. It does not have the liquidity concerns of Carvana. Carvana's bankruptcy risks are much higher than C3.ai's bankruptcy risk. And at this point, with revenues crashing, cash flows and operating profits crashing, I feel it's more important to look at survival, pretty much. Which company is more likely to survive, and C3.ai is certainly more likely to survive than Carvana is. And so I would say C3.ai is the better momentum stock to buy right now. All right, thank you for watching. As always, I appreciate your viewership, and I hope to see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.